Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday. Apologies for not being with you last week, everyone. I unfortunately came down with a chest infection, still seeing off the kind of tail end of that. But it was really difficult not to be on stream with you all last week. But apologies for my absence. Hopefully, we're going to make up for it a little bit today. So, very, very quickly before we crack on with the stream, we have got a lot of offers and deals and bits and pieces so that you guys can get involved with the Bird Nest. We're always trying to think of creative ways to get people involved in the community. If you're interested in any of the promotions, the information's down in the description. You can also find it on Twitter. But as for now, we are going to crack on. So a big shout out to everybody that is joining the stream live as well. We can see everyone pouring in this morning. Craig, brilliant to see you this morning. Good morning, Nelson. Kelly Barker, all the way from New Zealand. Hans as well. Great to see you, my man. Sorin, Sebster, MM. Absolutely fantastic. I know some people are struggling to get some comments coming in. Thankfully, and I'm really appreciative for this, it's because they're all coming in so quickly. Tool 325, the name of arguably my favourite band. Tool, amazing group. Good morning, my friend. CS Lychee. Nipar, thought you were late. No, mate, I'm still running a little bit behind in terms of focus and energy after being unwell last week, but we're planning to do some catch up today. I am game. Good morning as well. We need to get that alt market going. Yeah, absolutely. For that, normally you want to see Bitcoin behave, but kind of consolidate a little bit as well. And also, just another thing to say as well, morning Sorin as well. I see you sneaking in there. Quick question about hints or a good platform to trade S&P mini futures for Eurozone. Very tricky question, this one, because they work very differently in different countries. Over here, Pepperstone are pretty good. You've obviously got FXCM as well that are pretty good as well. Interactive brokers. It's difficult because it's very, very tricky to say. But what I would do is I'd just look up for reviews in your local area where you're from, your country, and very much heavily look at that on the Financial Radar site and things like what's it called? Trustpilot, which is very, very good as well to look at them. You've got to be aware of fees and brokerage costs and also margin. So do make sure you do your research on that, guys. So Crypto Buddha, good morning, mate. Good morning. So what I want to do today is I want to do a shorter stream. I want to focus it very much on the setups that I'm looking for on Bitcoin. And also to discuss as well, really, how it can be really tricky to kind of get into these moves. So let's start with that, shall we, guys? As always, do let me know if there's any issues with the visuals or with the audio, or if I'm going through anything too quickly and you guys just want me to chill out a little bit or or go over it a little bit slower. I'm more than happy. Sorin, you're very welcome, mate. I think there's some good resources on the Nest as well. I know Bast is someone that trades a lot of traditional markets. So, yeah, I know he's got some good insights if you want to reach out to him as well. So where are we at the moment? What are we looking at? What are my thoughts? So I want to share more setups with you guys, right? I understand I do a lot of education stuff, which is really good for some people. Other people want to see the setups and some bits. So I want to kind of do a bit of a mix, really. But today, I really wanted to just kind of explain my thought process on Bitcoin and why I've come to the conclusions where I am. And also, like a lot of people have said, that this was a really, really quick move up, right? Which it was. Now, when we're looking at fair value gaps, inefficiencies in the markets, right, which are these moves here, right? So we can see it's the cross between these three candles, 1, 2, and 3. Again, I'm not going to go into this in too much detail. I have covered it on previous streams and will happily do so again in the future. But it is the gap between these candles. It's when their price action is very, very thin here. So there's no orders really being filled. Transactions, basically, it's people, the price is flying right up to this level here. And these inefficiencies often get filled in the market. And just to make a point of that very quickly, we can see how this inefficiency here was filled over here. This inefficiency down here was filled as this one up. And we can obviously go on and on like this in kind, all right? Now, regardless of that side of things, what I'm kind of looking at these much more so is definitely from that side, expecting the market to rebalance them at some point. We don't always know within what time frame they can do that. Bernd, hey buddy, good to see you. But what I'm looking for it is if it sits within my bias, right? And that means that in this instance, for example, and we always want to review these whether they work out or whether they don't, because when we're looking at this here, it's no good me saying, oh, I wasn't looking at this one that, didn't work out, but obviously I was looking at this one that did. Yeah. So what I mean by that is here's our fair value gap. Price comes up, retraces into this. Yeah. Another thing that's important for me are the principles of premium and discount. Look, I teach many, many different methods. I've traded many different systems in my time. A lot of my concepts come from being part of ICT's mentorship many, many years ago, and a lot of stuff that I've learned from Trader SZ, as well as my brothers and sisters at the Nest. But if it is ICT concepts and that, I would always recommend you go to the source for that, right? It's very, very interesting character, wonderful the technical analysis. And, a lot of these kind of concepts have either come from his direction or certainly been refined by him over the years. But the idea is that when we have this, we're clearly in a bullish posture at the moment, right? Just get rid of that for a second. Higher highs, higher lows. We can see the bullish run up here. Right now, when we get into this part here where we've left this inefficiency, if we're expecting bullish continuation, the way that I'm looking at this fair value gap is that if we draw back into this, and I have a particular interest in the equilibrium of this move as well, so meaning the EQ here, you want to kind of see this acting as support down here. If we'd purged through this, then I'd be looking for a reaction here to see this turn to resistance, and then I'd have been looking for it to move lower down. However, it didn't. It held this level here, and I'm then looking to take this run here from high to low, or from low to high. So it's just simple. The high of the move here to the low. So this price leg, if you like, as price has moved up, then I want to see price retrace below the 50% of this, into a discount market, meaning that this is then where we would position ourselves looking for long opportunities, right? Which we would then look for on the lower time frames. So I'll show you very quickly what that would look like, just to give you some context over what it is we would be looking for when we look at the recent price action, okay? So as prices come back up into here, we see this drop lower. Now, once again, the fair value gap here, what I'm going to do is I'm just going to move this over to here just so that we get the idea of the premium discount range. All right, now if you watch the ICT stuff, you'll have this green and this red. But yeah, it's a way that I kind of just got used to over the years. But basically, the principles are that if this is the range that price is within, then shorts have the favourable setups here. Yeah, because when you think about it logically, that's what's looking to draw price down. Your risk to reward is much better if you're shorting up here, and your longs are favoured from down here. So when we overlay this in the respect of our premium discount range, which is this, we have our fair value gap here, which price has drawn into, okay? So in here, we're naturally looking for long setups if they form. We're not trying to impose our will on the market. We are literally saying, okay, look, if price comes into here and we start to build a bullish structure on the lower time frames, then there's a probability that we're looking for continuation. So we're looking to get the odds in our favour, okay? So we're within here. The other thing we want to be aware of is this, right? So we have this bearish fair value gap. So if our principle is the same, if we were bearish overall, we're bullish, but if we were bearish, we would be looking for price to come here, return to this area, and then sell off lower, all right? As it is, we're looking for this to get reclaimed and give us more confirmation that price could be looking to move higher. So what we would then do is we then look to move down the time frames. If we just pop a horizontal ray across here, we'll do this in a nice standout color, do it in a nice purple color. We know this is the 50% of our premium discount range, all right? So what have we said? We're looking for price to come back down here, And then again, all very dependent on what time frame you're trading on and also what your other parameters are. But just as a general outlook, if you were trading this on an hourly chart, right, you would then be waiting for price to run liquidity. Yeah. So you'd either be looking for historical liquidity over here, or you'd be looking for local liquidity, like we can see down here. Price is driving deeper and deeper, gets back into a bullish posture, purges low. What are we looking for? Like we said, we want to see a raid. Okay, so we can see the liquidity that's built up here. Price has come up, it's dropped back down, taken the liquidity here. No matter what time frame I enter on, personally, I'm always looking for the same thing, which is I want to see some sweep of liquidity. Yeah, so either a raid on a previous level or certainly from the level before. I'm then looking for a shift in market structure, right? So we want to see these highs come above, and within that move, we want to see displacement, right? So what does that mean? That's really kind of a sign for us that the energy within the move has been enough to leave an inefficiency, which is a fair value gap, okay? We would then take that fair value gap in terms of an entry. We would have our stop loss below the price, swing low, and then we would just need a clean target to the upside. So in this case, for example, not that I trade personally the hourly that much, but as we get in this example here, you would get your close above, price would come back down and trigger it on the next candle. You would put your stops just a pip or two below the swing low, and then I'd be saying to myself, okay, if this is my interim target here, this high, with our ultimate target for this level being to track down the highs that are left, because this is where we believe liquidity is resting, then that would be how that trade setup would look. If we took it onto the lower time frames, obviously we would be looking for lower high time frame setups. Now, some eagle-eyed ones among you might say to yourself, okay, well, what have we got here? Right? You know, price has dived into this here. If you're doing this on the hourly, right, then you're looking for the same principles here. Yeah. So same thing, we'd be looking for price to break structure. Yeah. So price would come down. The reason I wouldn't favor this one as much is because we hadn't had a sweep of a longer term level, right? As we look back here, we're just coming down to fill this inefficiency. All right. As we look back here, and again, when we look down here, price is coming up. We expect this inefficiency to be filled. If we look at that level, we take it back to here, fills the inefficiency here, but we don't sweep anything. Now, with this sweep here, what we can see is that we've taken key liquidity that's been building up here as price has been trying to grind lower, this slow grind lower, showing that it's struggling. We're getting a little bit of absorption as price is coming into these lows. Hey, Ken, good to see you on the stream, buddy. But then as we break out above here, right, then maybe this is enough reason to go long here, right? We're obviously looking at other factors as well, correlated assets, counter-correlated assets. But if it was, quite simply, this would have been our fair value gap if we deemed this the breakaway. Okay, we would obviously have our stops below here. We'd be looking for a target, again, in a similar way as up here. But we'd be very aware of this fair value gap as well, right? And we would have done down here as well. But in terms of the risk to reward, what we need to say to ourselves is, okay, let's take our long position. Here's our breakaway. Price comes back down below the prior swing low, as we remember here. Yeah. Now on this one, we can see we'd have a really lovely risk to reward as we target this high. So we need to ask ourselves, do we get to 2R? So for me, I look for 2R to be the position that even if I'm not an internal target, I'm looking to move my stops up at that point to protect profit. Do we get there by here? Probably just a little bit shy, yeah? So maybe this one would have been a loss. We had the breakaway. We can see why we would have got involved in the move. That liquidity sweep there could have been enough, no problem. But if we lose that one, obviously, like we say, we always need to keep our bias intact. Our high time frame bias hasn't changed. We wait for the next opportunity. And any small loss we made on that one, we would have made back quite nicely with this trade here, okay? So that's just to give you a little insight into it whilst we then move on to recency and while I just pour my tea very quickly. Quick question here from Dom. Don't you consider the whole move upside just one huge manipulation and just waiting for smart money to unload? Yeah, I mean, It's a very, very good point. Let me pop that up here. It's just so I can kind of put this into context. Smart money is very much like an ICT concept as well. It's really just talking about the idea of where institutions, hedge funds, and major players, be that whales or however you want to envisage them, larger money is setting itself up. And I think if we go to a daily chart again, we can take a look and see what Dom is talking about here. The fact that when we compare this with traditional markets, we look at the current economic climate, we look at what's happening in terms of the Fed policy, there's quite a lot of mixed signals coming out. So there is a concern from a lot of people that this is a larger move to the upside that's basically allowing the major players to offload their positions for a higher price before we then ultimately see a flush much lower. And when we're looking at what could support that, as we zoom right out on our higher time frame, this is Bybit. So I trade with Bybit. If you've got any interest in that, by the way, guys, you can find details to my trading link in the description below. You can come over and trade with us and get access to our calls as part of the free package. But we would have some historical data over here somewhere, right? Which was a previous all-time high. That's quite a significant level that we would map this out. However, when we're using recency data, what we're looking for doesn't really change, right? You see these inefficiencies, these fair value gaps, drawing price lower. The other thing that I'm always very conscious of are areas like this. Okay, so we've got areas of consolidations, prior consolidations, yeah? And these are like our orders, our order blocks, yeah, or our areas. And what we're looking for is for these to support price. We can see that this one did here. And in doing so, we had our fair value gap on the way down, back again on the way up, yeah? Again, I don't want to go into this too technically, but if you are someone that studied ICT, for example, you can see that this could be considered a balanced price range between these two, which is just where these two overlap. Let's do this in purple. Right, so overlapping fair value gaps here, price comes up. This then, the idea is that this uses this as a base to then project off of, which it did in this instance really, really well. The other thing to say as well is that we have a swing high here that's coming to fill an inefficiency, a fair value gap here. And then the flip side of that is when this is then broken to the other side, yeah, especially in a move that has a fair value gap, we see that as very bullish. Now, regardless of that, it's when we're looking at predictions, and like Dom's saying here, do we not think this is part of some major manipulation higher? It very, very well could be. I'm someone that in the past, especially in my early trading career, allowed myself to get very heavily distracted by narratives, by I suppose wanting to be right in a lot of ways, by thinking to myself, oh, I was when look, I was completely out of Bitcoin at like 57K, right? So here, yeah. So that was it. My long-term holdings went there. No, I didn't sell the top. It did take this breaking structure to the downside for me to get out. But when it did, I was out, yeah, heavily out, fully out a little bit further down. Then when we started getting into this, I started to become short, right? I started to become bearish, just purely based on market structure, all right? And by this, not just the sentiment in the market, but what the charts are telling us. Now, yes, I'm absolutely someone that's been quite vocal as well, thinking that this consolidation down here, all right, is something that we may visit at some point. But I'm not going to get hung up on that. I'm not going to say to myself every day, right, we're definitely going here, we're definitely going here. Because if we don't go there, which we didn't, and we hold this level and then we break to the upside, I'm not just going to sit there and say to myself, well, I'm just going to be bearish, let's hold. Why? And this isn't a criticism, Dom, please don't take it as one. I absolutely understand where you're going. Just my personal experience of kind of holding on to bias when I was younger kind of got me into quite a lot of trouble, and definitely not saying it's something you're doing, but it raises a very, very good point. And if we don't hold our bias and we're not getting married to that, when we've got our levels marked out and we see that we're starting to hold this, yeah, maybe we got caught offside here because we saw this level really holding nicely. We see the structure break, then it flushes out to the lows. But when this flushes out to the lows on the lower time frame, when we see and we get our structure breakdown and we get the information we need for our triggers, that's why it's important that we execute. All right. because the flip side of that is if we hold our bias, it can also lead to us missing out on a lot of stuff. Yeah. So, for example, when we came up into this level here, I was very bearish here. I was very bearish here. I was still bearish here, but I was still playing long trades, right, on the lower time frames because that's what the structure was telling me. Yeah, you maybe you've got some Dutch in you somewhere, Dom. That was basically highlighted and summarized what I said very well in very few words. I get it. Just follow the trend. Yeah, exactly right. The trend is our friend until the end, right? Is a really, really good statement. A bit cheesy, I know. Queen, that's very kind of you as well, mate. I do appreciate that. But as we can see here, this kind of brings us on to our next point. That's like, okay, so we are bullish now. For me, when we took out these lows, right, this liquidity sweep, then we took out this high here, we had this big impulse move higher. Immediately, my attention then turned to these, which were equal highs. So I thought we'd have some kind of reaction there. We did, but then price really powered through again as well. So if we look at this line here very quickly, and then I've still got this fair value gap in place, which is FVGD, the small case letters just highlighting the time frame that it's on. When we look at this, when I drop down to a lower time frame, I typically move from the hourly, then from the daily to the hourly. We can see when we had this move here, how fast up this move's been. It hasn't really been offering many retracements. And I think sometimes the issue, or not the issue, but somewhere where Bitcoin especially can be particularly tricky, is you have these big, huge movements. And then by the time a lot of people get involved, they've missed, the best part of this. And then that old enemy FOMO comes in. People start aping into moves around here, only for the market to come down, take out all of the stop losses of those people, right? And then when people start to lose hope, you get these little moves, these little sweeps, these breaks of structure, and then you get these, which are like your building blocks for the move to transition higher. So something I did want to take a quick look at today, because it's a question that's come up quite a lot, is how could we have got involved in this move, or how would I have got involved in this move? Now, I'm a very low time frame trader, so one of the advantages for my system is that I do get the opportunity to get into moves quite early, but I do have to be very aware of my risk, because while the system has a relatively high win rate, it has with it as well a low risk to reward ratio. So someone like Burb, for example, he's made 2 trades recently, just shy of $500,000 in profit on both of them. He made 2 losing trades earlier in the year, which he posts all of his positions, all of his sizes. But these losing trades were an absolute drop in the ocean, a very small percentage of what his winning trades were, right? But his system, being a trend follower, means that he's only, I don't want to say right, but yeah, his success rate is around about 30 to 35%, meaning that the majority of his trades have kind of run short, yeah? Ron, thank you, buddy. You have a great day as well. So he accepts the fact that 60% of his trades are going to be losing trades. 6 out of 10 trades. He has to wear that because he knows that his winners will run for a much higher return. Where with scalping systems, you typically have a higher win rate, but your risk to reward is smaller. Now, depending on what time frame you trade this on, for me, it wouldn't be any different no matter what time frame I'm trading on. I'm looking for a shift in market structure. I'm looking for the market to sweep liquidity in the favor of where I'm expecting price to go. Yeah. So even here, we have this big move higher, right? Price comes down, fills this inefficiency. Now, the reason I had this one labeled up on the hourly is because when we see a bearish fair value gap here, when we see a very bullish move through it, leaving a second inefficiency here, right? Then we can see and look at this to be like a balanced price range, right? So for this area here to provide support for price to move higher. So if our theory is that we've taken liquidity from the lows, right? Yeah, so we've exhausted the bears here. The bulls have now stepped in and regained control. Well, we're just going to use market structure to kind of step into that level of thinking, okay? So price has come down here. Now we can see we've run some key lows, right? This, first of all, is the consolidation here that led to this impulse move higher, okay? So now price is back down within this range. I want to see some liquidity swept. Liquidity got swept here, fine. But did we have a structure break? No, we didn't, yeah, or a structure shift. When this liquidity got swept here, this was our structure shift, yeah? Because look, lower low, lower high. higher low, break of this, yeah, even just above that little bit there, gives us our market structure shift to the upside. Now, remember what I said. When we see that shift, and realistically, when we're looking at microstructure properly, which we should be here, we'd be looking at this low, high, higher low, lower high, higher low, and then the break of this, again, with displacement, right? So the energetic move through that left this fair value gap. This fair value gap becomes our entry, exactly as I said to you guys previously on those trade examples, and then our stop loss would go under this swing low. All right. Now, we need to remember that we want clean targets, right? So I'm just looking for the next swing high. And this is just me respecting this. I don't trade this time frame, but these are the setups that I'd be looking at on the lower time frames. I'd be hunting, but price is fractal. So that means that basically the moves and the sizes and the moves, the patterns, the way that price plays out, you will see that repeated on the lower time frames as it is on the higher time frames. But how that would look as a trade is we would have waited for this close of this candle. We want price to move away. We enter on this position here. Our stop loss goes under the prior swing low. And for me, I want to see at least a 1.5 R to my first target, which is here. Because when we get up to that, I'm typically moving my stop loss to entry, trimming a little bit of profit and securing the trade. The next logical target is here, which is why we can see we've got our red line left on there. And if we'd ridden that up, we could have had a really nice kind of 5R trade. I would have definitely been taking profit here, but I also would have been managing this trade by looking that when we get above these consolidation areas, these down candles before the moves up, what we want to see is those being respected. Now, here's an example of that here. When we were long here, we were looking for price to come up. We hit this high time frame fair value gap, henceforth why this short trade was played. But the support was always expected to be found here. Why? Because these candles here, these down candles before this move up, are our bullish order block. They're bearish candles, but this is where we expect for bullish support. And we can see as we moved into this area, it allowed us to take a nice scalp trade on the higher time frames because we were expecting this pullback. We had the fair value gap as a target for price to pull into, and ultimately we want to see support down here. Now, we would only enter that position, or I would, with half a position size because it's counter trend. What I'm actually looking for is price to find support here, and then show us a willingness to move higher, which we can see that we got here. So I'm using this time frame to then dive into the lower time frame to find potential setups. So how does that help us for where we are right now? So we can see that we had this consolidation here. We can see the highest market was getting stopped here. Price is getting pushed down, right? But you can see by these long downside wicks, right, that you're getting a lot of absorption here. People are kind of stepping in, right? So then when we see the moves above it and price really pops, we can enter into these areas here, or obviously we can then look for the retracement, like we said. So I'm taking this as the price leg. Remember, premium and discount, I want to be long from down here, want to be short from up here. So when price comes down into this area here, for me, this is when I'm dropping down onto a 5-minute chart. And I'm looking for exactly the same thing that I just ran through with you guys on the higher time frame, right? I'm a very simple creature. I do like to keep things nice and simple. So the entry techniques and the theory is still the same. We're looking for here. We're looking for a sweep of liquidity, right? Do we have one from this level? No, we don't. Do we have one locally? Yes. And do we have one from before? Yes. We've taken this liquidity here. We've now taken this here. So we have our immediate liquidity sweep. We'll mark this one in just for the sake that it's cleaner. Now, what we're looking for here is our break of structure, right? So price comes down into here. Yes, we have our little low, a little high in here, sorry. So our initial market structure shift is here. But when we take our premium discount range at the time, we see price doesn't pull back into here, okay? So then what we're looking for, we're saying, okay, then as price moves up a little bit, obviously our range expands, but we've got a secondary leg here, right? We come up to here, we set our low. Now we've got a higher. See how we break this, right? Doesn't have to be by a lot. But we've now shifted, and that has an actual structure break to the upside. So that's still a lower low. There's our higher low, break of this. we're now in full mode. We do get our fair value gap, right? Hang on, let me do that in a clearer color for you guys. Right, so I hope you can see that shaded area. It's just that fair value gap. Price drives into here, yeah, and then drives higher. So I would obviously be taking into account this premium discount from here, all right? And we can see price comes into this nicely. We'd have to have our stops below the swing low. That's unavoidable here because the only other place we could have them is at the origin of the fair value gap, which is right here, all right? But just to show you that this would look the same. But again, remember what I said. We want a nice, clear internal target here. I'm looking at this fair value gap because we never came to refill that. So if I just take the low end of that, have we got our 1.5? We have 1.9. Again, when price gets to here, I can move my stop loss to entry so that I've de-risked, take a little bit off the trade, and then we move forward. JMG, yeah, ICT strategy, absolutely. I was fortunate to be part of the original mentorship back in the day, studied that obsessively for a number of years. But, not for me, huge respect for ICT and people that are very much purists to that. I, have nothing but respect for as well. For me, I just wanted to broaden my horizons, which is why I moved away from it, just to really expand my knowledge of trading overall, of markets, of macro. But a lot of his concepts make up key areas in my trading, absolutely. And again, would always recommend people go and check out his stuff at source, probably these days starting with the 2022 mentorship. But yeah, absolutely. But again, in the same vein, I do always recommend that people keep a broad set of horizons, right? To not just be too bogged down, have a nice broad understanding of the market and a very deep and narrow understanding of your strategy. Leanne, hey bud, great to have you on the stream. Always a long-term supporter. Always great to have you here. So that's where I am in that respect. How does that play into where we are at the moment? So just so that we're practicing what we preach, for me, we're kind of still in this price leg. I know we've broken out of this to the upside here. So I'm now saying to myself, is this a good place to long? Now, if we'd got a bit of a deeper pullback this morning, as I was just discussing, right? When we had this, we see how price dipped into this fair value gap here. See this wick here that just jabs itself in? This could be price popping into here to fuel for a leg higher. Now, had price dropped to the lower 50%, that's when I would be favouring long setups. However, if we just look at, for example, the price action over the weekend, right, and we can see this was the range that I've had in play since Friday, right, because price came up from here. This is where we had the sweep on the lower time frames. Then when we set this low here, I would move my range, which originally was from this low to this high. Then when this came down and price broke up on the lower time frames, this created a new trading range for me. So I'm happy to take long setups from under here, and short setups from above. So when we look on here, we can see that when we're above the line, remember, same trade criteria, right? We're above the 50% line now, so we're favouring short setups. It's within the London trading hours. I don't typically trade on the weekend because I like the support of traditional markets. Morning, Justin. So because we're above this, we're favouring shorts. Now remember, the setup is the same, So what do we have here? Liquidity sweep. What do we have here? Market structure shift with displacement, Displacement being the fair value gap, which sits in here. That's active the moment that closes. But remember, when we get the close of this up close candle, we need to make sure that our entry is within premium and discount. And it isn't there because that would have been this low. So it stopped us getting in here. However, we extend our premium discount range because this is clearly the low. That means that this here, would have triggered our short trade. Do we have an immediate and clear target? We absolutely do. The low that we have set right here. And we're obviously then expecting for a slightly deeper pullback. However, remember what we're talking about here. We're not looking to enforce our will on the market. We are just simply looking to trade this as the market delivers. Now, remember, stop losses here. Yeah, it's the origin of the fair value gap move. So here's the origin. Here's the candle before. We have to go above this. Have to go above this candle here for the stop loss. We can't be any tighter with it than that. Is this 1.5R? It is 1.9. So although we wouldn't have made a lot on this trade, right? Good morning, Goncalo. Although we wouldn't have made a lot on this trade, we would have got our stops to entry after 1.5 and we're at target 1, taken a little bit in profit, and then the market's flipped back up on us on reverse. However, remember, we're not holding ourselves to a bias here, right? So when the market reverses here, what's this? This is below the 50%, right? So this is in discount. Now, one thing where I'm a bit more loose than ICT is, and that's not to criticize him at all, not to even compare, is that if the trade setup starts down here, but triggers up here, I'm still happy to take it. The origin of the move has to be in discount though. So to give you an example of that, and this is why we can flip our bias from being short here to being long here, is what do we see? We see a move that breaks structure to the upside. However, now we're looking at this, we don't get that inefficiency here. We don't get displacement. There's no fair value gap. We're not seeing the energy in the move that we want to see from price, that punchy move higher, all right? So we keep monitoring. Do we get a sweep? We do. We can see this low here, taken out by this. What then happens is we then get this high taken out, and then we get this high taken out. We'll just use this one because it's cleaner. Do we have displacement in this move higher? Yeah, we absolutely do. Where does this move stop? Up here. So if we're taking the origin of the move from this down candle to up here, all right, or even if you were taking it from the low, do we have a fair value gap that is within discount? We do. We have this one here and we have the one below it. So we allow for both of them because we always expect that they're going to be retraced too, in which case we then need to put our stops again under this swing low. And this is where it gives us the opportunity to get long. We just tag in here, stops go below here, this swing low because it's got a higher low to the right and a higher low to the left, right? And then do we have a clean target to aim for? Sure we do. First target's here. Do we get our 1.5? Oh, I mean, honestly, I didn't make this up. It's just on there, right? So you'd be flipping back to there. Then you've got your upside targets here and so on and so forth. All right. So look, I hope that's been clear, guys. I have obviously rattled on for a few minutes more. I just want to share one thing with you very quickly, which is just what I think is going to happen, or certainly what I'm looking for here for current price action. And that's that I'm feeling quite bullish as long as we hold this. This is a daily fair value gap. I want to see this held as support, right? At the moment, we have to accept that this level here is capping the market on a short-term basis. So if we mark that in, gives us the opportunity here to watch for this. See how we're not getting any closes above it? That's significant for me. Obviously, I always want to zoom out because for me, the real draw on liquidity here at the moment is this high. Right, and I'll tell you as for why. If we get a hold above here, I think we can have a really key run up into this, also maybe into this as well. Because as we look at this level, look what this was. This was this real kind of origin as price just went, right? Look, we got this drop, this consolidation, this drop again. So I'd also be probably quite curious about the order blocks that live in here as well, which I won't cover now. But I think definitely looking at that, if we can hold ourselves above here, then fantastic. What would I want to see? I would still have liked a bit more of a drop, into where we are below. I think if we take this trading range here, I think a lot of people will probably be trying to ape in at the moment, trying to catch something. So we have this part of the inefficiency down here that falls within this fair value gap. Price comes into here. Right, into here. Remember, it needs to come under here. That's the inefficiency that we've got here, right? So you can see that's the top of it. This is the one there. If price comes down into this, I'm then moving very, very quickly onto a 5-minute chart, right? And then as we kind of covered back here, we then want to see a structure break with displacement being a fair value gap being left. We then want to see price retracing into that as we did here, as it did here, to then give us long setups. However, if we start really breaking down from here, right, we don't want to just enter this blind. Price pulls into here, yeah, something like this, comes down into this level. We get our sweep, price breaks structure to the upside, yeah, then this is something like what we would want to see, right? So we would see price come in and hold this inefficiency. We're now in discount. We want to see a little purge of the lows. So we see this swept, right? So we see the lows taken, the highs closed above with displacement in here, remember. In this leg up that breaks structure or shifts market structure, we want to see our fair value gap. And then that would represent our long entry. Our stop loss would be under here. And then from there, we would look to be targeting clean highs, either equal highs or relative equal highs where we think there's liquidity resting, and then the clean highs that follow, followed by further upside targets. So look, guys, just one thing left for me really is just to thank you all for joining the stream again today. It really, really has been awesome having you on there. We've had some really great numbers coming in today, which I really appreciate, especially after abandoning you guys to illness last week. So I really wanted to be present for this one. Hopefully I'll be back to full strength on Wednesday, which we're going to do a slightly longer stream, and we are going to do some alt requests as well. George, good to see you, or Jorge, apologies if I mispronounced it. Good to see you on the stream as well. And also, I just want to do a really big shout out to everyone as well. There's been some really, really lovely comments. I really do appreciate you guys for all the constructive feedback. If there is things that you would like to see more on the channel, please do let me know. But Sebster, George, or Jorge, Queen, brilliant to see you on here again, bud. Justin, the Visionary, thank you very much for your comments as well. Goncalo. Leanne as well, sneaking in late, but I know you'll be rewatching this again. Don't hesitate to pop over to the nest and give me any questions. JMG, Nipar as well, Ron Hart, Dom as well. Brilliant questions today, Dom. Really, really, really appreciated those. Ken, Burn, Sorin, Crypto Buddha was on as well today as well, I think. I Am Game, CS Lychee, Tool, Sorin, Craig, Kelly as well, all the way from New Zealand, and Nelson from the very first comment that we had today. Honestly, guys, it's a real, real pleasure to do this for you. I hope it's been informative. Do reach out to me. If you're interested in finding out more about what we do over at the Nest, it's a brilliant trading community. You can grab yourself a free trial in the description below. Come and reach out to me on Twitter for BC Richfield, BC_Richfield. And Hans, always a pleasure to see you on here, buddy. Becoming a real regular. I hope it's been good for you all. Look, have a fantastic week ahead, guys. Do trade safe. Keep your eye out. Remember, I think we've got FOMC this week as well. So do keep an eye. Use something like Financial Juice or something like that to keep your eye on the economic calendar as well. And thank you as well, Leanne, and everyone for your well wishes. Really, really looking forward to Wednesday's session as well. If you've got any ideas, if you've got any alts you want to see or any traditional market setups, do come and let me know. And we will absolutely smash it out of the park. For now, if you're interested in the trading bundles, I'm going to leave this up. I'm going to wish you all a fantastic week ahead. And I'm going to catch you all on Wednesday. Have a great day, everyone.